WLD just saw a $65 million OTC sale at its lowest price yet, raising eyebrows across the crypto space. World Assets sold 239 million tokens at $0.2719 each, with funds going to operations, R&D, and ecosystem growth. With over half the total supply set to unlock in 2026, market watchers are bracing for major supply pressure ahead. Institutional investors are moving billions into Bitcoin ETFs, challenging gold's status as the top inflation hedge. Bitcoin ETFs have attracted over $56 billion, with data showing Bitcoin outperformed inflation 97% of the time since 2009. As Wall Street shifts focus, experts highlight Bitcoin's fixed supply and growing mainstream acceptance, while Ethereum is eyed as future financial infrastructure. Bitcoin remains trapped below the $72.500 realized price, signaling ongoing bearish pressure. Short-term holders are realizing over $300 million in daily losses, with the risk of further declines if BTC fails to reclaim key resistance. As long as Bitcoin stays above $60.490, it avoids deeper drops, but the market remains fragile. For the first time, Tether's USDT reserves are facing a full audit by KPMG, one of the Big Four accounting firms. This move marks a major leap in stablecoin transparency, with the audit outcome set to reshape institutional trust and market valuations. As the crypto market digests this, all eyes are on how verified reserves will impact allocation and competition among stablecoins. XRP just posted its steepest first-quarter drop since 2018, tumbling 26.5% as Q1 2026 closes. Despite hitting $2.42 in January, macro pressures and ETF outflows dragged prices down. Analysts remain divided, with some warning XRP could fall below $1 before any recovery. Shibarium transaction volume just crashed 88% in 24 hours, dropping from over 10,000 to only 1,230. This sharp decline is mainly due to ongoing server migration and incomplete indexing on the Explorer, not a blockchain failure. Despite the Explorer lag, Shibarium's core network remains stable and operational, with most metrics underreported until indexing completes. VIX just closed above 31, marking its highest level since 2025, as oil supply fears spike volatility. Options markets are bracing for continued turbulence, with gold and silver holding strong amid Middle East conflict. The Federal Reserve faces tough choices, as oil-driven inflation complicates rate cut plans, while investors flock to safe havens and volatility hedges. Vitalik sold millions in ETH when prices were high, but retail investors are still holding as it drops to $2.160. Despite over 31,000 developers and a $233 billion market cap, ETH holders see little direct benefit, with staking yields stuck at 4%. The gap between founder profits and retail losses highlights the risks of holding speculative tokens in a volatile market. Over $12 billion in short positions are stacked above Bitcoin's current price, while only $3 billion in longs sit below, creating intense short squeeze pressure. This liquidity imbalance could push BTC towards $68,000 to $70,000, but unless it holds above resistance, a quick reversal remains likely. Traders should watch $65,600 as key support if downside resumes. SHIB's price keeps falling, even after gaining commodity status, as its massive 589 trillion supply overwhelms every rally. Meanwhile, AlphaPepe launches with a lean 1 billion token supply and real DEX revenue, aiming to deliver what SHIB's burns never could. In this market, scarcity at launch may matter more than regulatory clarity or token burns. A sudden $225.5 million outflow from US Bitcoin ETFs, led by BlackRock's Ibit, has rattled market sentiment. Bitcoin price dipped below $66,000 as institutional selling and heavy liquidations intensified, putting key support levels to the test. Traders now closely watch the $65,000 zone, with further drops potentially exposing deeper demand areas. Major altcoin listed on top exchanges just lost over half its value in one night, sparking panic across the crypto market. Dollar Core plunged more than 53% after large-scale sell orders triggered a rapid liquidation cascade on the Colin protocol. Developers say the system worked as designed, and most risks are now contained. But the event highlights how quickly market dynamics can spiral in DeFi.